Good day, everybody. It's Rich Checkan here from Asset Strategies International, and we've got a wonderful guest, a good friend of late, a recent acquaintance who I put a lot of faith into, and I've been following for years, and I'm glad we finally got a chance to meet. And that is Avi Gilbert, who is a market analyst, and he is the founder of ElliottWaveTrader. And we want to cover some topics today. Avi, first off, welcome.
Thank you so much for having me.
Yeah, glad you could join us, especially on some short notice. But I want to touch on some topics that are on everybody's mind. We've got a lot of things going on in the macro and globally with crises and economies, et cetera. It's having an impact on a bunch of indices that our clients, pay a lot of attention to. And I kind of want to go through kind of rapid fire, if you will, and pick your brain on some key indices and get your take on what's going on right now, if that's okay.
Absolutely.
All right, Avi. Well, we'll start off with stocks. Let's face it, most people have some sort of stock exposure in their portfolio. Like to take a look at the S&P 500 as kind of a gauge. What's going on there? Because it's got a lot of people nervous right now.
Well, I mean, there's good reason to be nervous. We have been on our toes for what could be a very long-term top being struck in the stock market. And I'm waiting to see some confirmation if that has been the case yet, or if there is yet one more rally that's going to take us into the end of the year and early next. So there is very good reason why people should be on their toes. We're approaching what likely will become a very long-term equity market top.
Gotcha. Now, if you look over the past year, everything was wonderful from the spike downward on what was it, Liberation Day or Independence Day last year, April 2nd, when the tariffs were announced. You saw a big fall off, and then it's been steadily moving up all year until the war or thereabouts. Is that going to continue till we get some sort of solution in the Mideast?
I mean, I genuinely don't believe the Middle East is as important to the market as many are portraying it. Normally when you get a turn in a market, the media likes to look at what is the news of the day, and they apply that news of the day to what the market is doing. There are many times that, they're flummoxed when they don't have the news to be able to blame a move on. But, I view these news events as more like, an excuse more than a cause. It could be a catalyst, but not necessarily the cause. The market was absolutely due for a pullback. So, it could have been the catalyst, but it's not a cause.
I'm actually glad to hear you say that out loud and in public, Avi, because I've felt that for quite some time. I mean, when we saw gold and silver, I'd like to move there next, gold and silver. We saw gold and silver pull back on the news of Powell's replacement. And I got to tell you, I thought it was hogwash. I mean, it's one vote on the FOMC, big deal. That is not enough to move the needle, I don't think, in gold and silver. But since that point, gold and silver have been in a bit of correction. What are your thoughts there with our two monetary metals?
It's interesting. Everybody thought, a lot of people were surprised that gold and silver are dropping during the war. Well, I mean, if we actually go back and look at history, and we look at the price of the way the metals move throughout history, we'll see gold and silver have moved up during prior wars, and they've moved down during prior wars. The war is really not anything that should we say gold and silver view as important. It's not a driver. Ultimately, at the end of the day, it's a general sentiment that was the driver, and the market was so overheated. It was also due for a major correction, and that's pretty much what we're seeing right now. So I can't say. In fact, at the end of the year of last year, I was out there publicly saying, guys, as we go into 2026, early 2026, we're going to see a correction. And that's exactly what we've gotten, and we're almost at my target. So I still think there's a little bit more downside to be seen. There could be an evil scenario that the metals may give us. If the metals start rallying now back up towards their highs, That's the evil scenario, because at that point, then we're going to get a big downdraft to complete the correction. It would be better if we just tore off the Band-Aid now and went straight down over the next week or two to complete this correction. But I'm watching how the metals are going to move over the next week or so to see, are we going to get the Band-Aid torn off, or are we going to get that rally and then the big flush? So I'm not sure about that yet, but it does not look like this correction is over yet.
Gotcha. And that was a question. I was at a conference last week, and that's on everybody's mind. When is the correction going to be over with? And I'm like, I don't know. Short term, it could go further south. Long term, though, I think you'd agree, there's still a place for precious metals in the portfolio, right?
Oh, no question about it. I mean, when the metals were meandering for so many years below the $20 region, I kept telling all of our clients, guys, if you're going to buy silver below $20, I'll tell you right now, you will be very, very happy in the future. I've now moved that target to, if you buy silver below $60, you will be very, very happy in the future. Because now we have the lower end of my floor right now for silver is 40 to about 53. That's my floor for silver right now. My expectation is we should get down to at least the 53.50 region before this correction completes. So I think it's a nice floor for silver between 40 and 53. So that's why I'm saying you buy silver now, anything below $60. I think over the long term, you're going to be a very happy person.
Yeah, so I think a common thread here is nothing moves up in a straight line. Am I right? Uh, it's hard as a dealer. I could tell you it is hard when a client calls you, even if you think the metals are going higher, even if you believe that in your marrow, when they bought it below 20 and it's trading about $100 an ounce and they say they want to sell, you're going to talk them out of that? I mean, profit is not a four-letter word, right?
No, there are different ways to approach this market, and for me, physical. When I buy physical, I never sell it.
Yeah.
My last purchases of gold were about 1,050 and much lower, all the way down to 300. My purchases of silver, I think the highest purchase I made in silver was at $15. So people do things for different reasons. If you want to trade in and out of the market, it's best to use trading vehicles. But if you're looking at physical, I have a hard time understanding why people sell physical itself. If you want to be a trader, trade trading vehicles. If you want to be an investor, you need to have physical.
Gotcha. So let's shift gears away from physical a little bit here, and let's look at the miners. Another question I got at the conference over the past week was, what the heck is going on with the miners? They're all sitting flush in terms of their margins. They're definitely doing the right things, and their stocks went through the floor as well. What is going on?
Well, I try to tell people, fundamentals are wonderful. You want to track fundamentals? Be my guest. It's not going to give you an indication of how the market's going to move. Fundamentals always look best at the highs, and they always look the worst at the lows. During a trend, fundamental will follow the trend, but at the turns, fundamentals will not help you. But when it comes to mining stocks, we are seeing a really nice opportunity coming up soon. Some of the mining stocks that we track, we believe may have struck their lows already and could begin a really nice rally. And we think a number of these mining stocks could actually outperform the metals in the next move higher. Going back to the metals for a second, once we finish this whole correction in the metals and we get to my downside targets, I'm unsure if this correction is going to last for much longer. There's a strong probability that it could. For example, so far we have been mirroring the 2011 start of the correction. And if we get one more lower low, that would only be the first leg in a very long correction if we're going to mirror 2011. But even if we do mirror that, there are many mining stocks, individual mining stocks, that if silver and gold only get corrective rallies when this correction is done, and then continue in a much longer correction, there are many mining stocks that will easily outperform gold and silver in that instance. So I think the mining stocks are setting up as some of the better opportunities. Not all of them, but a number of the mining stocks are setting up as better opportunities potentially than even gold and silver.
Yeah, you got to think this is a temporary thing with the miners, and they're poised for a big turnaround when that happens. The margins are incredible. The PEs are fantastic, especially when you compare it to the broader market. You've got all sorts of positives, going along, but you got to understand that when there's a downturn, virtually the first thing that gets thrown out are weak-handed holders of mining stocks, right?
No question about it. But like I said, the fundamentals are always going to look best at the highs and worst at the lows. So I think we're going to need to see, in a number of the general stocks, I think we're going to need to see more of a correction. For example, I don't think this correction is going to complete in the entire mining world until the GDX, which is the general mining ETF, is going to take us down to the 60 to 70 region. I think that's really where we're ultimately headed. So until we get down to there, I think there's going to be more machinations across the mining index, and not all the mining stocks are going to do as well as the others. There are a number of them that are set up to do nicely, but not all of them will go along. A number of them are going to hold back the GDX until we complete this correction. And I think the 60 to 70 region is now the floor.
Gotcha. Thank you for that. We're definitely living in interesting times, and not the least of which is interesting is the dollar's behavior. It was not that long ago that we were trading 111 to 116 on the legacy index. It tanked below 100. It's been living there for the better part of a year or more, and now it's starting to show a bit of signs of life, despite all the dysfunction and everything going on in DC. What are your thoughts on the dollar right now?
Well, my thoughts on the dollar are probably going to shock many. I am watching a structure that could potentially be pointing the Dixie north of 120 over the coming decade. That is not a solid prediction yet. My expectation is we are on our way back up to the 106 plus region first on the Dixie. We're going to get a pullback over the coming weeks, but once that pullback completes, I think we're headed up to 106 or north of 106. Depending on how we get up to there, then that's going to tell me if we are setting up for a major multi-year rally in the dollar to 120, north of 120, or if we're going to be mired in a very long sideways move in the dollar. It'll take us back to 90 again, then back up again. It could be a very long sideways move in the dollar, but I want to see how we're going to rally to 106 or a little higher in order to determine which of those scenarios is in play as we look to the end of this decade.
Gotcha. So you're not quite ready for the coronation yet, but King Dollar is a possibility going forward.
It's a strong possibility, very strong possibility that we could be seeing King Dollar over the next decade. But I'm waiting to see confirmation of that structure.
Gotcha. And I know you focus on the technicals and the charts, but it just what are the listeners to think when you hear all this talk about weaponization of the dollar and the frustration with the debt and the lack of attention to the debt here in the U.S., the dysfunction, the lack of ability to balance a budget even for a single year, and how does that translate into a strong dollar? Do you have any thoughts on that, or are you just focused on the technicals and that's it?
Well, I will tell you this. I have been formally trained in economics.
Yep.
That is what one of my degrees in college was in. And for many years, that's what I applied in trying to understand the markets. But there was definitely a missing piece. Something never connected when I looked at economics and how markets move. So, when I learned the sentiment side of the market, that was the missing piece. So I'll tell them in the exact same way back in the 2009 to 2011 region, everybody was only talking about the death of the dollar because of quantitative easing. And everybody was looking at, economics and saying quantitative easing is going to kill the dollar. And we're looking at this and saying, economics be damned, the dollar is setting up for a major multi-year rally. And we were looking for a move from the 73 region in the dollar, which is around the lows back in 2011. And in 2011, we called for a rally north of 103 in the dollar from there. And people thought we were absolutely nuts because of quantitative easing. I'm saying the same thing here. Ignore the economics. If you want to look at it from an economic standpoint, look at it as though, the dollar rallies during a deflationary event. We could be heading into a deflationary event, if you want to call it that, from the dollar's perspective. But I just say ignore all economics. It really will get you looking in the wrong direction more often than not.
Fantastic. I want to touch on all these topics in more depth, but we only have a limited amount of time today. The other thing I really want to get into, I know you have some strong thoughts on the banking system and the safety of that banking system going forward, but I'm going to hold that back right now, and I'm going to tease this because first off, I'm absolutely ecstatic that you joined us here today to give your thoughts to our listeners and our readers. But we're going to get a chance to talk again here not too long. For those of you listening on April 22nd, that's a Wednesday, Avi is going to join myself and Adrian Day for our next edition of On the Move. So that'll be from 7 p.m. to 8:30 p.m. Eastern Time. Avi is going to be our guest. We're going to touch on these subjects in a little bit more depth, but we're also going to get into that banking issue, which is going to take a bit of time. But I think Avi will tell you it is incredibly important that we touch on that.
The banking industry scares the crap out of me right now. I'll just put it like that. It scares the crap out of me. It's in a worse position than we were in 2007.
Yeah, and that was not a good position, by the way. So, Avi,
No.
we'll cut it here. Thank you so much for taking the time out of your busy day. I know you're pulled 20 different directions. We look forward to talking to you on the 22nd, 7 p.m. to 8:30 p.m. for On the Move with myself and Adrian Day. And I know you're going to bring incredible value to our listeners. Thank you so much for your time. And you'll be able to sign up for that webinar in this issue, your electronic issue of Information Line. So, Avi, thank you again.
Thank you so much for having me. I greatly appreciate it.
All right. Take care, my friend.